Some months ago, I shared a secret trading strategy during the London session that you can use to become profitable in the forex market, though it came with a lot of questions. And in this video, I'm going to address all those issues so that you can have a better understanding of this strategy. So without wasting time, I'm going to dive right in. What are you going to learn in this video? You are going to understand, number one, the key level you should be using. Number two, what is a breakout and what is a false breakout? You are also going to learn the proper entry criteria you need in order to be successful using this strategy. And number four, you are going to know how far back the key levels should be. Let's assume that this is the London session, previous London session. What you need to do is look at the London session that is closer to the current price. In this case, you might say price trading towards this side. So definitely this particular London session is what is closer to this price, because you want to be making decision of this past London session. This is what you need to do. When you identify that London session, mark out the highest point of that London session, the open close, which I call the reversal opening price. Mark out the highest reversal opening price and the lowest reversal opening price. These are the key levels in the London session. Why? Because when market come back to this level, the algo have a way of recognizing this key level, because this is the turning point of the session. Price move up, turning point, came down, turning point, and so on. The activity happening around here is very key. Now, why is this a different way of looking at support and resistance? In a typical support and resistance, you will be asked to highlight all of this. With this, it will be difficult to build a strategy around this. Where do you consider a break of the support line? Is it this place? Is this place considered a break? Or is it this? In this case, this is subjective. I want to give you an objective rule that you need to follow. A break is a break, be it in New York, be it in London, be it in Asia, be it in Australia, be it in Africa, or be it in Nigeria. A break is a break. So we simply need a line. This line represents a particular price. So when price approach that level, this is what you'll be doing. If now, before you go on, this particular chart here is on the 1 hour chart, H1. Okay, you want to identify the highest level and the lowest level in the H1 time frame. You have something like this in the London session. So you want to have the highest level and the lowest level in the 1 hour time frame. Mark it out. Mark it out. Then you go to the 5 minutes. Okay, the 5 minutes is where you're going to make your judgment. So this is what you're looking for in the 5 minutes. You want a situation whereby when you go to the 5 minutes, if market close, that's the 5 minute candle closes above this, this is an early indication that price will continue going higher. But what will give you that confirmation is a retest. You want to see a rejection of that level. When price retests and rejects of that level, when you see that rejection after a close for a bullish move, you want to see a close and rejection. After this rejection candle, you enter with stop loss maybe placed below this. There could be other areas where you can put the stop loss, but in a simple scenario, you put the stop loss just few pips below this, and then you target at least 3 hour trade, because this is a scalping strategy. Since you are taking entry from the 5 minutes, where you then target like 3 hour trades somewhere up here. This is for the buy side. Now, if you are selling, maybe price is approaching here for a break. In this case, you're looking at the break and retest. You want to see a retest of that, and then you enter the trade with the stop loss above. Then you, in this case, you are selling. This is one criteria. This is one criteria. The second criteria is price approaches here and then rejects. It comes in and rejects off that level. When that happens, you can enter at the close of this rejection candle with stop loss above, and then you aim for at least 3 hours. I don't want you to overshoot the profit target, because most times it moves from zone to zone or from levels to levels. But to be on a safe side and scalp successfully, you simply target at least 3-hour trade. By so doing, you get in and out of that trade fast. So in this case, a push in and a rejection, you simply take your entry. Same thing applies for the bullish side here. Price comes back down, tap into this key level, London key level, and reject. In that case, you take your entry at the close of that candle and then stop loss below, and then you target at least 3-hour trade. What happens when you have a false breakout? This is what happens, and this is how to find a false breakout. A false breakout occurs when you have a break above. Now, instead of this rejection, you have another push down, maybe a bearish candle, push down back below this. This is a false breakout, and in most cases, you can wait for the retest and then keep your stop loss here, and then you aim for 3 hours. Same thing here, you have a break below. Now, instead of the retest, you have a break back inside. In this case, this is a false breakout, and as a result of this, you wait for the retest of this and then a rejection. Stop loss below, and you target 3 hours. These are exactly what you need to be doing when trading this particular strategy. So we are going to go to the chart and explore how to execute this. From this my chart, this orange box represents the London session. To get that, you need to go to Trading View and download this particular indicator, Asian session, range and week and day separator indicator, and then you can copy these settings. I will scroll down gently for you to copy that settings. Once you're done, you click OK, and then to make it visible, you click this. This is hide. Then when you put your mouse around it, it will show you show. Then you click it, it becomes visible. The gray one is the Asian session. This strategy works best in a trending market. When the market is trending, these are times you trade this strategy. But in a ranging market, it might give you a lot of false signal, and then might reduce the win rate. This is simply Friday. Okay, this is Friday trade. I want to start on Monday. I'm going to do a simulation from Monday to Friday as an illustration. So in this case, price is currently here. So what do? You mark out, this is the recent price action. This is the reverse opening price here, the highest. We have one here, but this is not the highest. Okay, this is the highest. And we have another one here. This is the lowest. Okay, we have one here. This is not the lowest. This is the lowest. The ones within this particular one, you cannot pick this because the first one was not formed during the session. Okay, so you ignore this. Instead, you use this as the highest, not this. Okay, you can also look at there. Look at this level. Just mark out the highest and the lowest point. Okay, in this case, this lowest point is almost close to this, so I won't want to put plenty lines on the chart because it can become so confusing. So what you need to do, just minimize it like this. Look at these current ones. Yeah, first. Now we then play it forward. This one is the New York session. Now the Asian session is in. So now, before the London session opens, you will be on the 5 minutes time frame. So let's go to the 5 minutes time frame. This is the line here. Now this is the London session. So the London session just started. We have this line above and we have a line below. Okay, so because the London session just started doesn't mean you start entering immediately. No, wait for this particular setup to be formed. If there's no setup for that day, you don't have a trade based on this strategy. Maybe you can adopt any other strategy to trade. So you wait for price to approach those levels. Now you can see here, the moment price comes in here and reject, this is your entry. Yeah. So in this case, you're going to sell short. Once this candle closes, you sell short. Now, where are you going to put your stop loss? In this case, we have Asian session here. Okay. Sometimes market comes up to take the Asian market. Okay, so you don't need to fall victim. Put your stop loss above that level, and then you aim for at least 3-hour trade. 3-hour trade. So let's see what happens. By so doing, you've gotten your first trade for Monday. And once you've gotten this trade, you are done for Monday trade. You are in 3-hour in profit. Okay, now let's analyze this. You can see that price later went up to sweep this liquidity. So your placement of stop loss is very important. You have to take note of this because all of these are liquidity. Market needs to grab liquidity before moving. So where you place your stop loss, this is an indication that we are going to be bearish. But because you are going to be bearish doesn't mean you keep a tight stop loss. If your stop loss is tight, it will take you out. Okay, so where you place your stop loss depends on your understanding of liquidity concept. So probably you place it above liquidity levels, okay, so that it can give you buffer for your trade to move. And secondly, as you can see, the level is so strong that you don't even have a break above it. Okay, can you see? Price rejected, 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 rejected. Okay, someone like me, I can add another one immediately because it's a strong rejection, and then you can profit up to maybe 5-hour trades. And this trade went as low as what? 4-hour trade. Okay, so this is for Monday. So let's take this off. Go back to the 1 hour. So now on Tuesday, you are going to mark out this London session. You can see this particular London session. This is the highest level, and that is where price is close to. The Monday session is here. This is for Monday highest level. You can mark that out as well. And then, as I said, you can go as far back as. Okay, the main reason is you want to be sure that those levels are there because you are looking for a rejection of those levels. Okay, we have one here. We have this one here. Okay, I think that is the last one. This is far off. You can monitor in case price closes above any of this, then you can start using the technique. So in this case now, you are going to go to your 5 minutes time frame. Okay, now on the 5 minutes, you wait till the London session opens. Okay, so let's see. We have a close below that. Okay, now we are looking for a retest of this. We are looking for a retest because this is a close below this level. We want a retest and a rejection, but in this case we didn't get that. So this is a false breakout. This here is a false breakout. We have a breakout. Now instead of rejection, we have a break back in. So that is a false breakout. So you have to be careful there. Now let's see if we're going to see a rejection of this to buy. Now you can see the rejection here, and then you can buy from here. You can buy at the close of this. Stop loss maybe below this liquidity here. Then probably you can aim for this next level. Okay, the reason why I don't want to aim higher is because we have a level here that can reject price. Okay, so you have to be careful. Don't just calculate 3 hours at once. Okay, so let's see what happened. Now price went up into this level, okay, for a profit, and even close the next 5 minutes can also close above. So let's see if we can target this. Now this particular trade is done, but in this case we are still within the early hours of London session. We approach now this level. Now price tap into this level and rejected. Okay, the moment you see this rejection, you can take an entry there. You can short once this candle closes and probably give space for the stop loss, because if there's any form of liquidity, it will need to grab it. I don't want to go far left, and then you probably aim lower. Okay, so let's see. The first bar came up, strong rejection. This is a strong sign. Now when you see multiple rejection, this should give you more confidence that okay, we might be at the right side of the market. And then what happened? The market went lower. It went lower to this Asian session range before pulling up. So in this case, if you have targeted the 3%, 3 hour, you would have been in profit here. Now let's assume you over target this, whereas you are supposed to look for 3 hour trades. Okay, 3 hour trade. In this case, we were not hit. This was not, didn't give us our profit. And secondly, let's analyze this. We also have this session here. Okay, now when you enter this trade from here to this point, okay, and you take your profit, this rejection would have tempted you to sell. Now if you have taken this sell, you will have been stopped out. But this, you see, continue in here, take a sell. Normally this was where you are supposed to take off your profit. This line here, this is where you take off that profit. Then remember you had the 1 hour trade here, so this will have given you a nice 3 hour setting. Now once price reject off here, this was another entry here. So take your time and go through it. Rejection here, you enter with your stop loss below, and then probably aim for another 3 hour trade. So in that case, you can see price move up sharply into the upside. So in this case, you have multiple entries. Okay, when you go back and analyze your trades, why did you get stopped out or anything, you are going to see ways you could have done better. That will help you become a better trader altogether. So this is Tuesday. You can say the method worked, but we had a couple of losses here and there. In this case, if you did not take note of this London session key line, it will take you out of the trade. So when price approaches level, these are where you take off your profit. Now back to the 1 hour, and you can see price eventually came back down, giving us a bearish move, but we are already out of that market. So now we are going to wait for Wednesday. So this is Wednesday. This is Wednesday. You mark out the key level, which I've done here. We have one here, we have one here, we have this one, but because of multiple pricing here, we can take that away. Okay, so let's work with this, this, and this one here. So on this note, you go to your 5 minutes time frame. So 5 minutes, we already have the London session open here. So you watch price. Now you can see, do we have a rejection of that line? Not yet. Now we have that rejection, and it close above. Now in this case, we have a fake out. Now this is an advanced entry that I want to show you in here. Okay, when you have this push up, and probably that is your entry criteria here, then you see a fake out. When you see that fake out, this is I call the fake out entry. Once this fake out candle closes, this is where you enter the trade from. Okay, so on that note, if you entered early, probably your stop loss was too close and takes you out, there's no problem. You have to wait, and if this happens, this is where you enter the trade again. So we are going to take an entry here on a short. We're going to short this here. Then it's safe to say put your stop loss above the fake out entry, and then you probably aim at the next London session here, the key level. So let's see, and you can see price just tanked. This is probably news. This should be news driven. That means you can also trade this with the news. Now the moment price gets to this, these are London sessions, okay, you can decide to take off your profit here and allow, because since it's the news, market might be too volatile for you, okay. And you can see we have a break below that. If you have a retest, you can decide to join. So that's the retest there, and then there was a lot of manipulation happening in here, okay. If you take a retest, you'll be taken out of this trade, and then probably you allow the rest to go. So back to the 1 hour. For Thursday, you wait for Thursday. Now this is Thursday. Where are the key levels? We are currently trading around one of the key level here. One of the key levels here. Okay, so you still leave the previous day on, include it here. This is the previous day. It doesn't have a high. Okay, does it? It does. But it's still close to another level here. Okay, now a lot of you were saying that there were too many lines. You can remove those lines, but when you understand this, you know where to put in the lines. When it is close to where price is close to them, you look for the lines. It could be far back in December, it doesn't matter. If there was nothing in here and you look to the left, you see a reversal opening price on the London session, then you can take the trade. Okay, so let's go to the 5 minutes. So this is the 5 minutes. These are the levels we are looking at, but you are not going to make any reaction here because this is the Asian session. This strategy is only taken during the London session. So we wait for the London session to open. Now London session is opened and we have a close below that line. Okay, one of those lines is okay. You can delete the other one. In this case, you are going to sell short. Please stop loss above that level, and then you aim for 3-hour trade, or probably aim for this next level. Okay, let's look at 3-hour trade. So in this case, you watch as price move, and then boom, we got it. Now let's analyze this. When the Asian market opens, or before the London market, you don't engage, because some people say, look at the rejection here, why didn't you take this trade? No, this does not meet the criteria. You only take the trade during the London session open. Especially from my experience, the first 3 hours in the London session, you are going to see an entry. Okay, so now in this case, when the London session open, we have the 5 minutes candle closing below. This is the break, and you need a retest. And you can see price came back in and retested it, closed below. This is where you take your entry. Immediately this market, this candle closes, you take your entry, stop loss above, because all of these, I think in this case, liquidity has been taken, even though the Asian high still remains intact. Okay, definitely you can put your stop above that Asian high, because sometimes price may come back up. Price may come back up into the Asian section and then move down. So you have to be smart. Use all the knowledge you know in trading, especially liquidity, to tackle this. That will help you in knowing where to place your stop loss. Then from there, you can see the market went low, retraced a little bit, and then went lower again. Close. We have a rejection here. But from my experience, when you get your first entry, there's no point looking for a reversal. If you combine this with understanding the directional bias, you will not want to be taking this trade. Okay, so you can see price move down to form a new low there. So that is done on Thursday. You wait for Friday. So whatever happens in the session doesn't concern you. You're already taking your money and you are out. This is a good scalping strategy. You can spend time with your family, do other things that you love doing, and wait for the next day. You can see throughout the day, the market keep pushing down and down. Now, when it comes to psychology, do not regret I could have hold the trade. No, don't regret. Take what the market gives to you and you move on. Tomorrow is another day. Okay? So now, on Friday, we have the Asia market open. Now, the London market is about to open. So where are our lines now? You have to look to the left. Okay, we have this is close to that level, so you're going to mark this out. I think I'll mark this out. We don't have anyone here. This level might be close to, let's add it. If it's close to those other ones, we treat them as the same. Okay, so let's go back. We have up session above, session below this level. Okay, so this is interesting. You can see a trend in a trendy market, it pays, okay, but during the ranging market, you may experience some false break more often. So now we have this level. We go to your 5 minutes. So this is 5 minutes here. So you're going to wait for the London session to open. Now the London session is open. In this case, the difference is that the lines that we're observing are far off, so you have to wait till price gets there. You don't take any trade until price gets there. Now, one of the key quality of a forex trader is patience. Okay, just because maybe you've seen a chalk somewhere in here, you want to take the trade, fine. Maybe you are taking that trade based on that particular strategy, but if you are using this strategy I'm showing you, you have to be patient. So on this note, you wait for price to do its thing. We have the London session. This is where it will end. Okay, this is where it will end. So anything, you want to make sure that the price rejects or breaks this line or the line below within this London session. Okay, but if it happens after the London session, then you do not take that trade. So let's continue. Price is doing its thing. Price is getting close to this level. Do we have a touch? No, there was no touch there. Yes, in this case we have a break here, and here is the retest. Forget I push it too far. Break and retest, then you enter your trade for a buy. This is a bullish sign. So immediately, most times, once you see that retest and it closes, that's where you place your stop loss, and then you can give room for your trade to breathe. Okay, because if you do not, the placement of stop loss matter if this strategy will be successful or not, but the direction most times will be on point. Okay, or maybe you wait after this one. Maybe you took this trade, this entry, and your stop was too close, it took you out and then came back in. You can open on that one and then place your stop loss below this. Is that understood? And then probably you aim at least 3 hour trade. Okay, in this case this is 5 3 hour trade. Maybe you manage the rest. Yeah, 3 hour trade. Then let's see what happens. Wow, you can see price move high, creating a new high. In this case, maybe probably targeting this London session. Okay, didn't target that. You will have to be careful. So in this case, you've got your 3 hour. If you extend for 4 5 8, it went 7 hours. So your trade management is another skill entirely. How you manage this trade, it all depends on you. Maybe I will do a video on trade management. If you want a video on trade management, put it in the comment section. And if you have any question regarding this, put in the comment section. I will be open to answer most of your questions. So this Friday, Monday to Friday, we have profitable trades. Though we have losses in between, but that doesn't stop us from making money overall in the week. Now, this one might show you a very smooth ride. As I said, it happens this way because we are in a trending environment. If the market is ranging, the strategy might not appeal that much. Okay, so backtest this, practice more on it, forget the numerous lines. You can decide to take them off if it's confusing to you. Only apply it when it's close to the price. Look for the ones that are closer to the price so that you make your decision based on that. So if you have not seen the first one, I will see you in this video.